We are looking at a market that has completely changed direction on this report. The Dow Industrial is now up 19 points. Earlier, we showed you the markets were lower going into the number. Obviously, this is better than expected, and it is good news is good news. That's how it's playing out on Wall Street. Dow Industrial is up 30 points. The Nasdaq up 39. S&P up 6.5. Alfredo Ortiz, your reaction?
Well, Maria, I'm not surprised. I mean, ding dong, the witch is dead. Small business owners are cheering. And they are starting to hire again. Our new national small business poll that ran just after the election is showing that their confidence is at a record high, really, and that jump is at a record high. 40% actually expect to hire in the next 12 months. 3 out of 4 of our small business owners polled actually expect to have a very profitable year next year. And so they're excited. They're excited to usher in a brand new administration that believes in lower taxes, getting rid of red tape, and coming back to domestic energy dominance, which has been a major issue, obviously, during the Biden administration on inflation.
Yeah, it's going to be good to have a businessman back at the wheel, isn't it, Andy Poster?
That's right.
It's going to be great. Some of this reflects, I think, the optimism that people had going into the election. The betting averages were high. I think businesses felt good about what was going to be coming. You've only got maybe 10 days after the election for people to really react. By the time they did these numbers, the November numbers the monthly numbers usually come in about the middle of the month. But it's still great to see 194,000 private sector jobs, and we've got 33,000 government jobs versus 40 last year. An interesting thing is two interesting things that I saw quickly. One is that both September and October's numbers were revised up. Now, when's the last time we saw 2 months in a row revised up? That's kind of a new occurrence. So last month went from 12,000 jobs to 36, which isn't great, but better than it was. The other thing is we're still seeing the number of people employed not looking so good. We've seen 355,000 fewer people employed than last month, and about 725,000 fewer than just a year ago. So we've got these competing establishment and household surveys going on. But I'd say overall it was very encouraging, and I think as Alfredo said, optimism's up. NFIB comes out with its optimism survey next month, and I'd expect to see a November surge this year, just as we saw in 2016, based on the results of the election.
That's good. Charles Payne, you were focused on wages, hourly earnings. What's your take? 4% growth year over year. Your thoughts?
Yeah, no, I think this report checked all the boxes if you're a stock market bull. And again, we see the initial reaction somewhat to the upside. I'm not sure where it puts the Federal Reserve, but again, I don't know that we need the Fed right now with respect to, being as accommodative as earlier in the year when there was, everyone had the pom-poms for unlimited rate cuts. If the economy is at a certain point, and Stephanie Pomboy pointed this out, then rates have to stay at a certain level as well. I think we should be focused, all of us, on growth, right? Organic growth in this economy that's not relying on any sort of gimmicks, particularly the gimmicks that ultimately give us the inflationary pressures that still haunt most Americans.
Average work week up 0.1% for an hour to 34.3%. Charles, what should we make of these hourly and wage numbers, Charles?
The wage numbers are fine. They're, again, 0.4. That's good. The work week came in line. That number had, listen, businesses are loath to lay folks off because ultimately when the economy turns around, to find new workers, to retrain them and all of that has been just a disaster. Andy talked about the NFIB report. Always one of the key components of that is just how hard it is to find qualified workers. So when you have them, you hold on to them. If you can't afford them, you give them fewer hours. So maybe that trend is starting to slow down a little bit.
Luke, look at this volatility in the market. 2 seconds ago, we were up 40 points. Dow Industrial's now up 24. How do you want to trade this market here in the face of these numbers?
Yeah, so I think this actual report is probably going to be almost a non-event at the end of the day. I mean, you have good numbers that are optimistic for the markets, but then you also now have the Federal Reserve that's probably going to have to keep rates maybe even higher, may not be getting a rate cut next month, and that's going to be digested by the market. Now, what I will say is there's 3 takeaways from this report. The first one, a lot of people already hit on, the optimism component. I mean, this wasn't like at the day after the election that everyone got optimistic again. This optimism was fueled from September and October heading into the election as the numbers were looking good, the betting odds were looking good for Trump. But the second thing was the strikes last month and the hurricanes. I mean, this is a rebound from the strikes getting figured out, the hurricanes, thankfully nothing crazy happening this month, but getting past that is obviously helping this job report. And the third thing that no one's really talking about is we are still going through this AI implementation transition. I mean, like Apple, Google, Amazon, Microsoft, they're spending like $1 trillion in R&D, research and development, over the next couple of years for this AI implementation. To implement this technology, you need workers. You need workers to design. You need manufacturers to design the chips, design the technology. You need transportation to transport some of this technology, like servers, right? So at the end of the day, this AI implementation transition is also helping fuel these job numbers. The question becomes, what happens when the AI technology gets implemented? What happens to workers then?
Look, it's a fair comment, but Steve Moore, I got to get your take on how we're looking at policy playing out here. President Trump about to step back into the Oval Office January 20th, unleashing lots of expectation for growth and a better macro story. But why are they pushing the extension of the tax cuts all the way to the end of 2025? You know what John Thune wants to do. He already said it, that he is going to actually focus on the border, then focus on energy and defense, and not do the extension of the tax cuts until next year at the end of the year. Your thoughts?
Yeah, you nailed it again, Maria. There is a real infighting right now within within the Congress, among the Republicans, where the Republicans in the Senate want to do all these other things before the tax cuts. I think most of us on this panel agree that it's absolutely critical that we get this done, hopefully in the first 100, 150 days, not just extending. I want to make sure people understand this, Maria, because sometimes people overlook this. If Congress does nothing, we're looking at the biggest tax increase in 50 years in this country, because all of those tax cuts will automatically expire. So doing nothing is not an option. We want to keep that corporate tax rate low. We want to keep the small business tax rate low. We want to make sure that the middle income people don't see a big tax increase. There is going to be a fight on this, but I guarantee you, I mean, Donald Trump is absolutely 100% committed to getting that tax cut extended, and also adding the things that he talked about, Maria. No tax on tips, no tax on Social Security, no tax on overtime. I don't know if all those things will survive, but I can guarantee you a lot of them will be. And once we get that done, I mean, it's very good for markets and for employment if we can get that tax cut done. I know Alfredo has been working 24/7 on this.
I mean, I just don't know if it's possible to do two different reconciliation packages to get this done. John Thune floated this two-step plan that would see first the bill, a non-tax bill, passed before April 30th, and that includes $60 to $85 billion for the border wall, ICE, deportations, all of that, new energy permitting reform and others, all good. We like it. But the tax bill dealing with the extension of the tax cuts are going to be sunsetted, and following that, House Ways and Means Committee Chairman Jason Smith is opposed. He wants the first bill geared to the extension of tax cuts. Yes.
H.R. 1. And just one quick point, and I'll let the others respond. You don't have to use reconciliation to get the border wall built. I mean, my gosh, the American people voted overwhelmingly for this. I think, the reason you use reconciliation is because it only requires 51 votes in the Senate. But these kinds of things John Thune is talking about, I mean, I think you get 75 votes in the Senate for building the wall and immigration reform. That was one of the most important issues in the election.
Yeah, I don't understand the thinking here. We got to dig in on this. Stephanie Pomboy, your thoughts on 2025 and where you think the growth will come from with these new incoming policies, Stephanie?
Well, I think this discussion about the timing of the tax extension is so important, given what I said at the top, which is that if we're talking about a stronger growth backdrop, we're talking about a monetary policy that's going to be on the margin more restrictive. And I'm not talking about them raising rates, but if rates just stay where they are, it's a massive headwind to the economy, from consumers to corporations, and obviously escalating our debt service. You went through earlier in your show the latest bankruptcy numbers. on the corporate side. And, we just continue to see businesses going under because they cannot service their debt at this level of interest rates. And, if you look back to when the Fed started tightening in March of 2022, by October of that year, the market started anticipating the pivot. We weren't even halfway through the Fed tightening, and they were already anticipating the reversal on the other side. So much of this rally has been built on the presumption that we were going to get lower rates. And if we don't get that, we need something to come in and provide offset. And that something is going to be the sweeping deregulation and the tax cuts first and foremost. So I think this discussion about the timing of that is so important to underscore. And so as to my outlook for 2025, a lot of it will turn on that precise timing, because right now, as you talked about, and I mentioned, these bankruptcies continue apace. The delinquency rates on consumer credit cards and auto loans continue to accelerate. People are under real duress. And while the optimism is infectious and it will translate to some increase in CapEx, you really need to see these tax cuts come through to offset the higher debt service that they're going to be contending with.
Yeah, very good point.